With the increase in home prices and interest rates, we are seeing more and more where we have cosigners helping out borrowers on buying their homes. In fact, the first-time homebuyer age has jumped up from what used to be an average of 27 years old to now 39 years old. So it's all a sign that it's getting tougher and tougher to buy a home. And that's why we see the cosigners getting involved. So this is an update to a video I did a while ago. We have a few new guidelines on cosigners, and we're going to hit on those. My name's Miles Pitcher. I own Superior Lending. We're first going to talk about cosigner versus co-borrower, what loans allow you to be a cosigner, pros and cons, and then I want to give you some tips and alternatives if you are going to cosign or you don't want to cosign and you want to look at other options. So a co-borrower is someone who's obligated on the loan and will live in the property. That's a co-borrower. A co-signer, we call them non-occupant co-borrowers, or a cosigner. That just means you're obligated on the mortgage, but you will not live there with the primary borrowers. So why would someone cosign? What it helps with is for our clients that are lacking in income or their debt ratios do not meet the guidelines. And when I say debt ratio or debt to income ratio, that means we're looking at what their monthly payments are on debts, including the new mortgage. What percentage are those of their gross income? And that's how we determine our debt to income ratio. If we have a client that has a very low credit score, and the cosigner has an 800 credit score, that is not going to help. When we price loans and do qualifications on credit scores, we will always go off of the lower borrower's middle credit score. So like I said again, if the borrower has a 620 credit score, the cosigner has an 800, everything's going off the 620 credit score. So credit scores of the cosigner will not help. Can we do cosigners FHA? Yes. Conventional? Yes. VA, we have a caveat here because if the cosigner is not a veteran, it will trigger a requirement that the borrower brings in some down payment. If it's a husband and wife, one's a veteran, they can generally do the 100% financing. USDA does not allow cosigners. Jumbo will depend on the loan program. Each lender has different guidelines on jumbo loans. One quick note here, and this is an update from earlier this year. Can a parent, or let's just say a cosigner, cosign for multiple FHA loans? So think about it. A parent helped their daughter buy a home. They co-signed on her FHA loan. Now, a few years later, they want their son to be able to buy a home using an FHA loan. Can they co-sign on that also? The answer is yes, they can. The guidelines came out and made sure that they could do that. Okay, pros and cons. Pro, you help somebody get started on home ownership. Could it boost your credit? Yeah, it could. Could it improve your credit mix where maybe you only had revolving debt before? Yes, it could. The cons, if that borrower or whoever you're co-signing for misses payments, it could ruin your credit. It could ruin your relationship. It could cause issues for you being able to qualify for the future on a mortgage. So you need to make sure that you understand the implications here of being able to qualify in the future. The other thing to think about is if you co-sign for a child and their spouse, what happens if there's a divorce or a bankruptcy? That's going to hurt you also because you're co-signed on that loan. So a couple of tips here, or alternatives, I guess. We'll go alternatives first. So if you don't want to co-sign, Think about gifting to them more down payment so their debt ratios improve. That's a good way to do it. Also, if the client or the borrower can't qualify because they have a bunch of car loans or credit card debt, even better than giving them the down payment is to maybe come in and pay off some of their credit cards or car loans for them, improving their debt ratios. Another idea, buy the home yourself, and then allow them to buy it back from you when they're mortgage ready, or just help them start on a smaller property. A couple of tips. So, contingent liability rule. What this means is if the borrower makes 12 months of payments on time by themselves, not out of a joint bank account, but out of their own bank account, in the future, after 12 payments, you as a cosigner will be able to exclude that debt or that mortgage payment out of your own personal debt ratios if you're trying to qualify for a mortgage. That does not mean that you've been released of the debt obligation of the mortgage. You still are on the hook, but it frees you up to be able to qualify for mortgages. Also, if you're a cosigner, you need to make sure that the payments are being made on time. So what I highly recommend is to the borrower and the cosigner share a login to the portal where the loan is being serviced, so that the cosigner can log in every single month and verify that the payment has been made. The huge deal. You don't want to get blindsided that some payments have been missed. We've seen more than one time, tons of times, where a client is more than capable of making the mortgage payment, but for some reason they have it on auto payment and there's a glitch, something happens, the payment doesn't get made, and it hurts and dings their credit score. If you're a cosigner, that would ding your credit also. Always have a refinance plan. This is a big conversation we have with our clients and cosigners, is saying, how are we going to get you off this mortgage in the future? We build that plan ahead of time. We make sure the borrower knows what they are lacking or what they need to do to be able to refinance into their name only in the future. And then the other thing is always just keep your name on the title as a protection. Don't remove yourself off of title of that property until you have been paid off, or the mortgage has been paid off, or been refinanced and you're off that obligation. We are always happy to look at scenarios, help give you guys quotes, talk through ideas with you. Here's how you can get a hold of my team. Thanks for checking it out.